Hey everyone, good evening. It's Brian from Bearable Traders here. It's Sunday, April 12th, and hope everyone has had a good weekend and a long weekend with the Good Friday being the holiday. And we're getting ready to kick the week off here Monday. Monday will be a regular market day, even though it is Easter Monday as they call it. So we will be in the room in the morning. Pre-market show will start at 8:30 and we'll be live on YouTube at that point, and then we'll see what happens. Right now, futures are showing a down market here. That's just right now. You never know what's going to happen in the next 8 hours or so, 10 hours between now and then. But right now they're showing down. So let's go through the week that was and take a look ahead, see what maybe is coming. We've got a lot of earnings. We've got earnings starting to kick off this week. As most of you probably know, we'll have some of the big banks, JP Morgan, etc. will be, Goldman Sachs will be kicking off earnings, and we'll have the regionals banks in the following week. And of course, the earnings that they come out with aren't going to be all that interesting. It's primarily going to be a reflection of what's happened before any of these significant events with the virus, and it'll be the guidance, it'll be the comments that they'll be putting forward that'll be probably more in focus and more interesting than what the actual earnings are going to be here that are going to be reported. So anyway, let's take a look at how we went out today here. It looked like we went out up on the beginning and finished pretty close to flat. You can see here pretty much flat day all day on Friday. Still sort of a balance, new highs, new lows. We're back in, and then lots more advancers and decliners. So the bull market continues in the middle of a bear market, or the bounce, if you want to call it that. Let's take a look here at some of our indexes that we like to watch. Transports, and kind of going to have a theme here. To me, this looks like we're kind of running out of momentum. Again, we'll see what happens. I think now people are going to be sort of waiting to see what kind of earnings are going to come out. But you can see here lots of transactions in this lower level, lots of buying and selling, lots of positions being taken. So this kind of makes me think that we may not go back and test lows. On the other hand, we do look like we're topping out a little bit here, so maybe we consolidate sideways. We've got a lot of bad earnings probably in the future. We've probably got a recession. Probably, highly likely we have a recession. But on the other hand, we've got the Fed, and obviously the bad numbers came out on Friday with the unemployment report, and then the Fed came out with their 2.3 trillion. Kicking the pants with saying they're going to buy everything and anything that moves. So they say don't fight the Fed. So it is going to be an epic battle, I think. Again, we're kind of looking like we're settling out here into a range. But let's just take a look at the indexes here. It's daily. You can see here pretty much of an indecision day on Thursday, I should say. But not surprising going into a long weekend. Didn't really expect a big move one way or another. Had a really nice ABCD pattern here. And on the weekly, again, we just on the Dow, we literally stopped out around the 200 moving average. So again, we'll see where things go. Certainly, volume was light on the week, but again, we are only 4 days, and we've got rising RSI. And the IWM, I mentioned on Wednesday, I thought the IWM was still poised to go higher, and it did on Thursday before we closed the week out. IWM, nice gainer, and up almost 18%, over 18% on the week here. So nice move for the small caps. Again, we're at a level of prior support. This would be in a support level, and now you can see here we bumped up against that, and we'll see if we can push through there. If we can, our next level will be around the obviously around the 135 where we got opened here, and then we'll see if we can get a gap fill if we get a continuation move. And the Qs actually didn't have a great day on Thursday. On the week, not a bad week. Again, well above the 200. It's been performing, the technology complex has been performing much better than a lot of the other sectors. And we broke through what could have been some resistance here and came pretty close to filling this gap on the week. So again, we'll see if we can get a continuation move. I'm on the fence. I think we'll probably start churning maybe early in the week, and as people wait to see what kind of guidance comes out of the banks here and the CEOs of the banks. Again, SPY, kind of an indecision day on the Thursday. Decent volume. And again on the week, nice move up into this sort of area of resistance, support. And so yeah, we're kind of 2,900 could be the next level we revisit if we get a continuation move. If we do get a pullback, I'd be looking at 2,650, support at the 200-day on the weekly. Again, the dollar. Again, this is against, primarily, it's most significantly against the euro. This measure, Japanese yen. But you can see here kind of indecision day. But if this, again, I don't think this is going to break down, but because US dollar still is the currency that most commodities and people around the world get paid in, so I can't see, and there does seem to be, I read something about, a bit of a shortage of US dollars in the foreign company or foreign countries, shortage of US dollars, not a shortage of US dollars on the balance sheet, obviously, with the Fed, but shortage of US dollars around the world to pay for stuff because, the economies have kind of been shut down here. VIX, again, just leaking off here. Now, just because this is leaking off does not mean that the market is going to go higher. It could also mean that we're just getting less movements on the, on the daily ranges of the indexes and stocks. And you can see this VIX continue to leak off, and at the same time we can see the market start to grind lower. We won't get the real radical sell-off that we got a couple weeks ago, but if we just continue to grind lower a little bit at a time, VIX will continue to come in at the same time. So that's not necessarily a relationship. A down day necessarily means that the VIX will start to spike back up again. So this stuff on, let's take a look at some of the stuff on watch here. You can see the gold. I'm really keeping an eye on gold here just because of there's so much money printing going on. And when I say printing, I don't mean that literally. Yes, I've seen some memes of Jay Powell just churning out the US dollars. It's not really what's happening. They're just putting money into the system by, say, buying bonds, treasuries, like other securities, that kind of stuff. People are speculating whether the Fed will step in and start actually buying stocks. It's crazy times. It really is. But again, with the Fed being so active, it's just seems like there's a put there. Meaning that they'll step in and support whatever they need to do to support the market and prevent it from going down. So I think people are speculating we're going to have another pullback and maybe a pullback back down to and test these prior level lows that we hit. I don't know, but I do feel pretty good about gold, and if we're continuing just to print money like it's going out of style, I think gold could be a good hold for the long term. Here's GLD. We're right up at this prior level of resistance. We probably are going to pull back from here, but that could be a good entry, good opportunity to get an entry. KWEB's Chinese Internet ETF been pretty damaged with some of the revelations recently about some of the Chinese names, stock names, fraud, and so even though some of the stuff like Alibaba's in this ETF, there's other ones like Baidu and Tencent, that kind of stuff. MU, interestingly, we had a really rough day on Thursday with the semis, and not really sure why, but on volume, and RSI kind of rolling over here a bit. Square was a swing that a few of us did in the room on Wednesday into Thursday. We got a nice sold it, but and then we got a really nice pop at the open. But then this is a really strong reversing candle actually. You can see here we stormed up to a new high and then sold off for the rest of the day, and rejected the 200-day moving average. Obviously came really close to it. A couple of moving averages there that we just rejected from. So I'd be looking for a little bit of a pullback here on Square, but I obviously on volume, decent volume coming into this, and RSI strengthening, MACD still looking good, stochastic still looking good, so I think there'll be some continued strength, although we might be looking at a bit of a pullback here. TNA again popping up with the small caps. That was one I had mentioned in the video on Wednesday. Oil's really just struggling here. I think on the weekend we got sort of a video. They had a video conference to firm up the agreement that they made regarding the cuts. I don't think the market was overly impressed with the amount of cutting that happened, and oil, I responded accordingly. Even though there was an agreement, the oil was all over the place on Thursday. So you can see here we finished down on the day, and I believe in the futures market, don't quote me, but I think it's down right now. Let's see if we can see here quickly. No, oil's up half. Looks like oil's up half. Gold's down a bit right now. And you can see here futures are bouncing around. The Dow looks like it's going to open down around 300 at this point. Wouldn't put too much faith in that. At this point, again, lots can happen between now and the morning. Something else, let's take a look at some other stocks I was looking at here. BCRX, some of these small cap bios. Again, they seem to be in play just with the virus situation. This looks like it could be an interesting play if it can break out above this 225 level, and we could get a nice move up to close to 3, maybe 280. 280 would be where the 200 day is. CLNY is interesting, came up on a scan and looks like it's going to break out here. It could, $3, a gap fill here could be in the cards, and then a move up to even $4 could be something for an extended move there. Eros is breaking out here. I'd be looking at this one as well. It's kind of into an area of no man's land, but if we can get past some of these moving averages, could be an interesting move. As I just had up here, this is the ETF that's a financial bear. Of course, it had a really big spike up 75 on that pullback we had in the market, but it's really right back down to where it started just prior to the market sell-off. So if we do get some bad earnings on the banks or bad guidance, that could be a really nice stock to play back for a bounce there. Here's another one's breaking out, MYOV, and it caught my eye. Here we had a gap fill, and now we're right back at the 200-day moving average, and looks like 11 could be in play if we can break out above this 960 level. Be putting an alert on that one, and these are ones that we've been playing here as a proxy on the SPY. So the XPXS, which is short, and then there's an XPXL, which is long. We've been day trading these. XPXS would be good if we started, if we thought we were going to start to get a sell-off again, and you get a nice move on those. TZA, again, good way to play the small caps on the downside. This will go up when the small caps go down. And XRT was another one I was looking at. Looks kind of, it did fill this gap here and then completely pulled right back off of it. We had a couple of nice days volume here, so maybe XRT might be interesting. This is a retail. This is the Spider retailer. So I think retail is really going to suffer in the next little while. Just my general comments. I think we're talking about how the economy is going to come back once we get through the sort of the lockdown phase. I think the economy is really going to struggle. You have to think of how many people are, living paycheck to paycheck. How many people have been, economically damaged and probably behind on their rent, behind on credit card payments, car loans. All these people are not going to be going to restaurants. They're not going to be going out and buying, that new pair of sneakers. This is going to be a long haul for recovery, and just psychologically, people are scared. They're nervous. It's not a great time for retail. It's going to be no matter how much money the government's going to put into the economy in terms of stimulus and stuff. It's still going to be a while before the emotional, if you want to call it that, the emotional and psychological damage that's been done. People will move on eventually. It will be in the rearview mirror, and but it's going to take time, and that's about it. That's about all I'm going to talk about today. We'll see you in the room tomorrow. I'm going to be very interested to see how Monday goes, how we open up. If we open up green and sell off, if we open up red and pop back up, it's going to be an interesting day, and it's going to be an interesting week. Here's my book, How to Swing Trade on Amazon. If you haven't picked it up already, it's there. I'm not doing too many swing trades right now, but you've got to be pretty nimble in this market because you just never know, what the next day is going to bring in terms of headlines. So headline risk is always a bit of a danger at this time. So I hope everyone's had a great long weekend. Again, we'll be in the room at 8:30 doing the pre-market show and live on YouTube if you're able to join us there. Otherwise, we'll maybe even see you in the trading room when the market opens at 9:30. So enjoy the rest of your evening, everybody, and we'll see you tomorrow morning, hopefully. Bye for now.